Hello everyone and welcome back to Southern Wealth. I hope you had a wonderful week. The weekend is approaching very quickly, so I hope you're as excited as me to enjoy another great weekend. We have turned, at least where I live, quickly to autumn, which is kind of depressing in my opinion, but it is what it is. The good time is unfortunately over, but we had a very good summer over here, so I hope you had the same. If you do enjoy the content, please consider dropping that like and subscribe. I greatly appreciate. So thank you very much for your support. Now, we basically had two things happening, which I will go back to a couple of predictions that I made. Number one, oil prices should have peaked around late September, beginning of October. So we saw oil prices growing to about $94, $95, and then we've seen the retracement. However, I did mention at the time that when it comes to oil, that's the reason why I avoid commodities to such a degree, is that you still have some big volatility, because anything can happen in the world and basically trigger up the oil prices. Well, that's exactly what happened a few weeks later with the conflict that everybody's aware in the Middle East, and we still didn't see a new higher price. This shows how strong the downtrend was after that cyclical late September, beginning of October. I'm not saying we're going to see higher prices, but with commodities, it works like this. If you have events of this magnitude and they keep happening, you'll see more and more of it. Now, I did predict gold to go to 1850 and below, which it did. And around 1810, 1815, I did mention, we should be finding a bottom here. We should have gone up all the way back to 1870, 1860, 1870, but we have completely exploded over that value because of course, gold is also a crisis metal. So it's not only an industrial metal, maybe some degree of monetary metal, you also have it as a crisis metal. So when things like this happen, gold tends to spike. So it is spiking about $60 today, and that's a big move for gold. It's not the first time we've seen it. We've seen it last year, February 2022 or so, or March 2022, when, the other conflict started, and we did see something going like this. So will it happen again? More difficult to say. Reason being, gold actually went down to about between 1850 and 1820, and that actually should have been the bottom, because that's very close to the 200 week. So people have asked me, what kind of indicators do you use? Simple ones. That's why I don't make 100 predictions like these other channels, and then they get 50 right, 50 wrong. No, I make very few predictions, exactly to avoid looking like a crazy person who is right about half the time. So what does that mean? So stocks were volatile once again. Bonds are going up, as I think more people are thinking money printing eventually. That eventually should kind of stabilize the other markets. As I mentioned, TLT, which is the bond ETF, is the one that basically controls the rest of the market. We are seeing, despite TLT going up, they tend to precede stocks, and reason for it is volatility and uncertainty, which are the two things that the market hates. So when people are thinking, but how is this possible that stocks are going up with higher rates? Yeah, because the market is pricing the market is pricing the higher rates and what are the perceived effects of those high rates. So when the high rates started, stocks went down quite aggressively. Why? Because they don't know what's going to happen, right? As soon as they start saying, okay, this is happening, that is happening, as soon as the hikes start to happen more often and the effects start to become more obvious, then stocks can go up with higher rates. People forget we had the tech bubble, late 90s, which was one of the most spectacular bubbles of all time, and rates were a bit higher. I mean, it's perfectly possible that can happen. I mean, the fact that people now think, you see, the reason why most people think that stocks can only go up in low interest rate environment is because many of them started investing in the 2010s. And they rarely look at the market before that, only to see crashes, like, oh, crash this, crash there. So they can say that that's why the crash is happening next week. So, but that's about it. They actually don't look at the environment. Now let's go to some important parts on crypto. Crypto continues to not do anything at all, pretty much. But today there's a big deadline, which is the Grayscale Bitcoin Trust. Today the SEC has until midnight to basically come back and provide new evidence on why it should basically not be able to be converted into a ETF, into a spot ETF. And if they fail to do so, the application of Bitcoin Grayscale Bitcoin Trust to be converted into a spot ETF becomes, basically is back on the table. So instead of the SEC refusing it as it did in the past, they now have until midnight to basically challenge that decision, provide new argumentation. If they fail to do so, Grayscale Bitcoin Trust is back on the table to be converted into a spot ETF. People ask, what is the big deal about it? Yeah, so basically the Bitcoin Trust has no daily redemptions, meaning it doesn't go to the market and buys or sells real Bitcoin. Basically, buys at a certain point and then the value of it fluctuates over time. So that's why you either have premiums or discounts, and it's basically worse. And the reason why the spot ETFs are actually beneficial for the world of crypto, it's in the term of pricing, of price of coins going up. Like, this is as basic as possible. So I'm not here to argue for the long-term philosophical impact of institutional money coming in. I'm talking about short-term or medium-term appreciation in price. If you don't believe me, go check what happened to gold price when GLD was invented. In case you don't believe that what I'm saying is actually beneficial for price. You see, institutional money is way bigger than retail money. Now I get it. At least me, I'm here for the price appreciation. Now there's always these saints who are here for the tech. Sure, look, there's going to be someone who's actually here for the tech. I mean, there's always someone for everything. But if that is true, then nobody should own Dogecoin. Nobody should own Bitcoin instead of Ethereum, for example. So that just showcases how completely untrue that statement is. Where people say, oh yeah, but Ethereum is more centralized. Look, man, Bitcoin has about 5 mining pools. That's it. And 4 of them are either controlled or have a big stake of BlackRock in them. You have about 2 or 3 companies that do all the mining hardware, and 2,000 wallets control about 40+% of all the Bitcoin. So when that centralization conversation comes around, that doesn't work for me. You need to come up with an argument that actually, for people that know what they're talking about. Not for people who just say, oh, Bitcoin is decentralized. No, it's not. It's never been. And actually, the reason, and people always get this backward. When did Bitcoin appreciate the most? When it was the most centralized in terms of ownership. You see, people conflate 2 things. Centralization in terms of ownership, centralization in terms of the operational side of the network, which is the mining hardware, mining pools, hash rate, all of this. So yeah, Bitcoin is actually centralized in many aspects of the system. Depends on what you're looking at. And I mean, even when they say, oh yeah, but in ownership is very decentralized. I mean, 2,000 wallets, 40% plus Bitcoin. Well, doesn't seem that decentralized, but who knows? But in any case, my opinion, this can open the door for institutional money to come in, the legitimization of the industry. What I'm looking for, this is me, you guys do whatever you think is best, but what I'm looking at is basically opportunity to create financial independence, generational wealth, because in my opinion, that is the basis for all the other freedoms, okay? So in my concern is mostly about price appreciation. I get it, it will open the door for manipulations and all of that, I get it, but not in the short run. So, and by the way, it doesn't really matter what I think, philosophically speaking, because these things are gonna happen, either I like it or not. So I need to be honest, in my assessment, I think it will be positive for price appreciation. Will it be bad overall in the long term for crypto and the system and the type of money and the manipulations? Sure, I'm not arguing that. The point is something is happening and I think it's gonna happen. And I try to position myself against the most likely outcome from that situation that I cannot control. So in any case, I think today is going to be a busy day. I'll probably crack a video on it tomorrow or so. But in any case, guys, thank you very much for following the channel, and I'll catch you in the next one.